What happens when Canada quietly makes a deal that could open the door for tens of thousands of Chinese EVs in North America's backyard? Because this week, Ottawa signaled a major pivot, cutting barriers for Chinese electric vehicles in exchange for Chinese tariff relief on Canadian farm exports. And if you're in Washington, this doesn't look like trade housekeeping, it looks like a crack in the anti-China tariff wall. Let's break it down. Canada's move is basically this. A limited quota of Chinese EV imports gets a much lower tariff than before, and in return, China lowers tariffs on major Canadian agricultural exports, especially canola. On paper, it's a classic trade swap. You want access? Fine, but we want access too. But geopolitically, it's bigger, because it puts Canada on a different line than the United States, which has treated Chinese EVs as a strategic threat to domestic industry and supply chains. Now, I'm Imran, a Middle East-based analyst, and the key question today is this a threat to the United States, not in the China takes over North America sense? The threat is structural, and it comes in three layers. Layer 1, industrial competition. Chinese EV makers are globally competitive on price and scaling fast. If Chinese models enter Canada in meaningful volume, it pressures prices across the region, and that creates political heat in the US. Auto ecosystem, especially around jobs, subsidies, and plant investment. Layer 2, the alliance problem. The US strategy works best when partners move together. When Canada breaks ranks, even partially, it creates a precedent. You can cut your own deal with Beijing. And Washington worries that this becomes contagious, not just for EVs, but for batteries, critical minerals, and broader supply chains. Layer 3, security and regulation. The US has been tightening scrutiny of connected vehicles. Anything with advanced sensors, navigation systems, and always-on connectivity. Even if Chinese EVs enter Canada, US, regulators can still block access to the American market through cybersecurity and national security rules. So the US doesn't just get mad, it gets motivated. And that's why you could see pressure points emerge. Rules of origin fights, new compliance hurdles, or tougher demands inside North America's trade framework. Now, zoom out. Why would Canada do this? Because Canada's incentives are real. Farmers want market access. Consumers want cheaper EV options. And Ottawa wants trade diversification when relations with Washington are tense. But this is also risky. If Chinese EV imports rise, Canada's domestic auto sector could scream. Provinces with major auto jobs could push back hard. And Washington could retaliate indirectly. Not necessarily with a headline punishment, but through friction that makes trade and investment more costly. So here's the bottom line. This isn't just Chinese EVs are coming. This is a live test of whether the US can hold a unified tariff front, or whether economic pressure forces even close allies to start cutting side deals. Now I want your take. Is Canada being pragmatic, or is it opening a strategic loophole that Washington will slam shut? If you want calm, fast breakdowns like this, smash the like button, subscribe and share. It helps the channel grow and tells the algorithm to push real analysis. Let's break it down again in the next one.